Well, suffice to say that this is a market which is inherently strong at the index level. At index level, there's no problem with this market. Though at the broader market level, of course, now we've been making this point ad nauseum that it's a bit of a bear market out there in the mid caps, select mid caps and small caps. But for the index, it's okay. 10,940 now. Ashwani and Mitesh with us with some BTSC calls. Ashwani, before we get to your calls, I wanted your thoughts on how to approach a stock like Jubilant now, and of course your own calls.
You were asking an interesting question. Why would the promoter do it? It's like, it's my company, it's my life. I mean, is there any reason you can pledge the parent company, you can take loans from whoever, the stock can halve, minority shareholders can go to hell. I would think at some point good sense will prevail. Possibly these are good levels to get into Jubilant or at least start buying from here. We've seen earlier also when stake sales etc. have happened, the stock comes back and there is no basic problem. Having said that, on the market, it's basically not going anywhere. It probably needs a trigger from where, higher levels you get to see big selling coming in, because bear market is there and possibly, people are waiting for higher levels to sell, maybe RBI policy, etc. Having said that, BEL is a sell with a stop of 82, target of 75. Bharti Infratel is a sell with a stop of 291, target of 278. And UPL is a buy with a stop of 788, target of 810. Just a small point on the index, 11,023 is the budget day high. And all of these rallies going up to those levels are basically pullback rallies. At some point, this pullback should end. If it does not end, then we are breaking out. But that appears unlikely. So I think anything up to 11,000 should be treated as a pullback.
Okay, yeah, fair point. Let's see if we can actually take out that budget day high, whether we can build around that or not. From the lows, there's quite a bit of buying that's come through on that one stock. So, yeah, it's a big shoot up on that India Cement chart. Let's get some more trades in. Mitesh, what would you do in the last 20 odd minutes?
I have a buy on MGL, and we've been recommending both IGL and MGL regularly. I think MGL now is showing more continuation patterns, so could go to about 980. That's a buy with a stop at 940. And STBT on Ramco Cement with a stop at 592 for targets of 575.
Okay, well, that's some BTSC calls. IGL is surging ahead of numbers. Just pull out that stock. It actually, in last 1 hour, gave a bit of a decline. That's the only big number which is still not out. Just look at that move on the stock. 302.6 is what you have. And it's not a fresh rally, keep in mind. Just pull out a 7-day chart on IGL. You will see. I don't know what the street is building in here, because over the last 7 days, the stocks rallied about some 11%. And we're in a kind of market where things can be very interesting. But for now, up 11% over the last 7 days. Anand Tandon is with us now. Anand, hi, good afternoon. Your thoughts first on a stock like Titan. It's just been one-way journey for the stock now, 1,070.
Well, there is a limit to how much anybody can buy one stock, but at the end of the day, when the stock puts up the kind of results that Titan has done, you would have to keep on saying that, the story is still there. The management continues to guide fairly aggressively. So that's probably one of the few stocks in the jewelry space, probably the only one, in fact, which has been gaining market share. And therefore, you have to put aside all other concerns so long as the growth continues.
Titan's been really on a tear after the numbers came out, good performance coming through. Other stock that we were just discussing, a while back as well, Anand. I mean, Z is really building on a lot of momentum now. Is this just a one-day flash in the pan move, or can we really say that this is a lot of value at these levels? Would you be a buyer, Z?
Well, if you look at the value, yes, absolutely, there is no reason why you shouldn't be valuing it. However, that is on the assumption that so the basic assumption we are making is nothing wrong with the operations. All the problems in the stocks are because of the ownership issue and the leverage there. So at some stage that leverage goes out, that becomes a huge opportunity, because obviously the stock has been beaten down very significantly. The only question you have to ask yourself is whether you want to do it now or wait for the actual transaction to happen, because we've seen many of these leverages continue to drag stock down further. But in this case, since there doesn't seem to be any issue in terms of the company itself, one would argue that even if there is a drawdown, you can hold it and see through that trough.
Okay, all right, Anand, just hold that thought. So the index is refusing to give us anything today. 10,930 is pretty much where we're at. We've discussed some of the high flyers. Z and Titan are among them. But on the flip side, I mean, you do have a weakness on the likes of an ITC today, TCS, Infosys. Some of the big tech heavies have not contributed. So you've got a even-Steven level. But Anuj, I mean, really, where does this leave us? We've been talking about this range-bound market. I don't know, ranges can go on for maybe months. Is this how it continues? How do you see this?
I think range is not the problem. Range market can go on for as long as it can. My worry about the market is the nature of the market, this bipolar nature, because we went through a period in which it looked like everything was back to normal, October to December, November, December in particular.
Mid-caps had started performing. Overall, there was a lot of sector participation.
Exactly, a lot of stocks were participating. Domestic stocks had made a bit of a comeback. All of a sudden, it's back to just IT and Reliance, and a lot of mid-caps underperforming. And it's not normal for stocks to fall 20-30%. Almost on a daily basis, you're seeing at least 3 stocks down 20-25% in the F&O market. That's obviously not normal. Now, it's not the first time that we've seen a bipolar market. It's not the last time. There are some parallels also to what happened in, say, 2009. Ahead of election, when the market just completely went into a bit of a tizzy. But after the election, there was a pent-up move that happened. Of course, that happened because the election outcome was far better than what the market thought. But that was the reason. But to answer your question, the market can stay in range for long. But this kind of market saps you of energy. In terms of investors, unless of course you have taken a call that I'll be only with these 7 or 8 stocks, which honestly is very tough. And even there, some rotation is happening. A few days back, it was ICICI Bank. Off late, it's Axis Bank, if you take a look at what's happening even within banks. So at index, perhaps it's some more time for this range trade. 11,000 you sell, 10,500 you buy. You keep on doing that trade till that trade reverses at some point.
Okay, well, there's about 6 or 7 stocks that everybody is willing to buy blindly, and then there is the rest of the market. So I guess that's just the kind of situation we are in.